$30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled regardless of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So, yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that. But we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here today, and as we kick off our Tuesday show, we got some more economic data to look at today. Two fresh reports out this morning. The first one, and the one that people are more familiar with, is the retail sales report data. Comes out every month and tells us, hey, where are Americans spending money in the retail world, and how much are they spending? The headline number this month, Paul, came in at 0.7%. But stripping out autos, which were up 2.8% for the month, we saw the ex-autos number come up just 0.2%. What are your thoughts on what we got from this report today?
I was overly optimistic in terms of the numbers that we saw across the board. I mean, autos certainly had a significant impact on things, but it did indicate to me that the consumer remains resilient. If you look at consumer spending, whether it's through GDP or retail sales, which we're talking about here, it's been a pretty strong year for the consumer in general, where we saw that 0.7 increase and a 3.8% year-over-year increase through the month of November, unless you have do you have a more dismal view of it just because of that outsized impact from autos?
Well, I don't know that I have a dismal view. I don't look at it and say, oh, man, this is horrible.
Yep.
But I do think this is one where there's been a lot of chatter and pieces written about people that have been going out and stocking up on things, including making big purchases, trying to front-run potential tariffs. The place that you would see that, most notably would be in autos, because obviously the potential tariff on a car is a lot higher than the potential tariff on a pear or a banana. So I do look at this and I say, yeah, the expectations were already high on this front for 0.5% on the headline number. The core number actually disappointed, excluding autos. We were expecting to see 0.4%. That was the consensus estimate out there, and we came in at 0.2%, so I think that's a little bit lighter on that front. And to me, again, I don't think there's any weakness that you can tell from this report, but I think it's much more, hey, with all the stories being written and the anecdotes about people trying to go out and buy things before tariffs potentially take place, to see this kind of growth without, outside of autos, I think is something where you say, that's a little bit disappointing from my perspective. It's not inherently bad or anything, but it's kind of like, it's okay. It's good. It's not great. And it does make you wonder, hey, if that impulse is real and that impulse fades after the next month or so, what does it look like then if all that retail buying's been pulled forward?
Yeah, and the next question is just where does this go in terms of its impact on the Federal Reserve, which we'll get to here. But it's hard to parse out, whether this is truly a one-off specific to tariffs or if there are going to be other parts of consumer spending that would pick up in subsequent months. But it does seem like all indications on the holiday spending side that there is quite a bit of resiliency on the consumer spending. So we'll have to see how it plays out.
Yeah, I agree on that front. It's something where you at least look at these numbers and you say, hey, consumers were at least able to make these purchases,
right,
and willing to, and whether that spending was from next month or was already going to be in this month, I think it matters to a certain extent, but ultimately we're not overly concerned with month-to-month fluctuations. It's much more where is the trend going over 3 or 4 months. And so, hey, if we see that for the 3-month period of November through January, things are on trend, okay, I don't know that you can tell anything bad from that inherently. The place where you are seeing something that's a little bit discouraging is the industrial production numbers that came out about 45 minutes later at 9:15 Eastern. And what we saw here, second straight month of decline here on industrial production, and we were expecting to see a little bit of a rebound in November, the big reason being October had a couple things that were going against it. The first was you had hurricanes that had hit in late September and early October, and so they had taken out some industrial production capacity in the southeast. The second was you had a Boeing strike that was going on through a portion of October, and so you said, okay, you should get a bounce back from that. Instead, month over month, industrial production came in down 0.1% for the month, and so you kind of look at it and you go, okay, is there something weird going on here for whatever reason? Again, it's 2 months, so I don't know that you look at this and go, hey, this is something that you need to make a huge deal about. But ultimately, this is something that still is a driving factor in the U.S. economy. And if you're getting prints that are contractionary by nature, you look at it and go, is there something I need to be worried about in terms of where this is going? And it requires further monitoring, I think, in my opinion.
I think that's fair to make those points of concern because you look at whether it's this report specific to industrial production or if you look at the manufacturing PMI reports, they have both been weak, like you mentioned, over the first quarter, or rather the last quarter of 2024. There has been not a lot of economic expansion in those areas of the market. So I definitely think that it bears monitoring heading into 2025. That we really haven't seen a lot of uptick. These have been some pretty weak reports. So I think certainly fair on that side of things to raise just a little bit of concern to monitor industrial production and manufacturing. The retail sales side of things, something that it bears monitoring as well, I guess. But none of this, Chuck, that points out really to overly concerning, but things to monitor, like you mentioned.
Yeah, I think that's fair in terms of how to look at these and what you do with them. Actually, it doesn't always have to be, hey, best economy ever or worst economy ever. There are shades of gray in the middle, and sometimes it's okay to just say, yeah, this is fine. We can watch it, but it's fine, and we can see where it goes from here. This leads us into the topic of the Federal Reserve meeting that is going to conclude tomorrow. And, hey, what do we see from the Fed tomorrow? But more importantly, it's kind of baked into markets right now that you're going to see a cut from the Fed tomorrow. There's almost a 100% chance priced in by the Fed funds futures market. The bigger question is, what kind of guidance do we get from the Fed, and how does Jay Powell talk about this? And I think we've seen, the preview of this in several Nick Timiraos pieces from the Wall Street Journal, just because, Nick and Jay have a pretty close relationship, and so Nick gets the scoops on what's going on at the Fed. And by and large, it seems to be, hey, we're going to cut tomorrow is the messaging.
Right.
But don't expect much from us in the near future because we think we've done enough given how the economic data currently looks relative to 4 or 5 months ago. And as such, you should be prepared for us to take a little bit of a pause because by and large, the data has gotten better in October and November relative to what we were seeing in July, August, and the first part of September.
Yeah, exactly. So back in July, like you were mentioning, particularly the labor market was an area of concern. Some of those concerns have been remedied temporarily, though you can make arguments the other way that, and we'll get into that later on the analysis, just where the labor market stands. But the trends that were emerging in July didn't tend to be as difficult as we thought it was going to be for the labor market. We now sit looking at the CME futures, as you mentioned, 95% probability that we will see that 25 basis point cut tomorrow. What will be interesting to see is, like you said, what does 2025 look like? If we're looking out at the first meeting for 2025 in January, it does seem at the moment that there's an 80% probability that the Fed would just stand pat and just stay where they are after assuming a cut in tomorrow's meeting. What will we see from projections from the Fed? The Fed back in September, its officials had projected about 4 cuts for 2025. That number, it seems like from this piece here by Nick Timmeros, is going to be lowered a bit. So all of that information we'll be looking to gather some more sort of tidbits on, but also what are the policy impacts going to have? That is something that's being battered around as well.
Let's take a quick break here. When we come back, we'll talk about the economic vibes that we're seeing. Is the vibe session over at this point? We'll discuss when we return.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network. Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. With winter on the horizon, and now's the time to start looking at a fabulous holiday vacation, and there's no better place than the U.S. Virgin Islands. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. No passport is needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
Paul, we got a piece in the Wall Street Journal today, and it is talking about the end of the vibe session. What are we seeing here, man?
the vibe session, to educate everyone out there who may not be familiar with this kind of niche term here, is that there was a big disconnect between how well the economy was doing and how people felt about themselves financially. Obviously, we're coming off the heels of several years of elevated inflation. So when you looked at the polling on consumer confidence and all these other metrics heading into 2024 and through the midst of it, there were very negative readings on terms of how the consumer felt, contrasted with an economy that was actually pretty strong. We saw a 2.8% GDP print for Q3 of this year. The economy is growing at a good pace. The labor market is in a pretty sound space. But really what we've seen for a long time is that the consumer had not been happy. That seems to be slightly changing here, as we had indications from surveys that were done that the Consumer Confidence Board Confidence Index rose in November to the highest level since 2023. And you also had about 38% of households anticipating that their financial situation is going to be better over the course of the next year. That was the highest since February of 2020.
In terms of what this means, actually, do we have anything in evidence that suggests, hey, now that we're seeing this means X, Y, or Z for the real economy?
To me, I don't think there's a real direct correlation that you can draw from consumer confidence relative to how the economy is going to perform. It seems like that it's hard to draw a straight line through the two things, working in conjunction, just because the consumer tends to have a different view than what truly is going on from an economic perspective.
So I think that this is one where, look, the soft data matters to a certain extent. We covered, obviously, and we've talked about this. But ultimately, what you care about in the economy is, hey, show me the actual growth that's happening. Show me what you're getting as far as actual economic production and expansion, and that's the stuff that matters more. We've also seen how, look, you can have things that, present themselves on the surface as being a good economy, but people still don't feel good about it for any variety of reasons. If you looked back at, the middle of this year, take a look at where we are right now, just as an example. Unemployment's at 4.1%. Headline inflation is running, I think, 2.6 or 2.7, somewhere in that ballpark. And if you just polled Americans, without saying that they've gone through it, but just said, hey, unemployment's at 4% and inflation's at 2.7%. How would you feel about the economy? Most of them probably be like, well, great. Like, it's, unemployment's low and inflation is, moderate. Like, it's not too high, but it's fine. Instead, like, we've generally gotten pretty bad readings on the economy, and it's partly because the last, number of years, last 5 years now, have basically been something where each year you've been dealing with something new, and so it's been, okay, we're just kind of getting hit over and over, and so even though the broad economic data that we look at has been pretty darn acceptable, people still haven't felt good about it because of the path that we've taken to get there.
Exactly. And it's just, you can't overstate enough how much inflation really seems to impact those consumer confidence numbers, because that was the whole story for the last 6 months, a year with these reports.
Yeah, and so I think that as we look at how the sentiment polling is coming out on the economy, I think one thing that this has taught me, and we covered it yesterday about, look, the immediate political swings that you see whenever there's a change in the presidency. We covered it because for the last 25 years you've been seeing this as consistent as gravity. It's just every time there's a new president elected, the people who are responding from that president's party say things are good and the other group says things are bad. So like we know that that's something that happens. But the other thing that this has, I think, enlightened for me as far as, hey, how do people actually think about the economy? It's not just about where it is today. And I think I used to believe that it was more about, hey, where are we going? But the lived experience matters as well in terms of, hey, what have you actually gone through in order to get there? And that's not something that really clicked for me before this, because ultimately most of the data that we were seeing until this point, just because we hadn't really had any meaningful inflation in 40 years, and so during my career it hasn't been something that mattered until the last 3 years. It was really, hey, the data that we're seeing now is pretty reflective of the sentiment data is pretty reflective of current economic conditions, and this is the first time that it's kind of not been, in my opinion. I'm interested if you have any thoughts on that, Paul.
In terms of just the alignment and then the disconnect between where the economy is versus what people feel where it is.
Yeah, and I think quite honestly it goes to that inflation piece, because like you go back and you look at 2009 through like 2016, just as an example, and there was a pretty clear correlation between as unemployment went down and as the stock market went up, sentiment got better. And this time, even though inflation came down from 2022, even though unemployment came down from 2021, and even though the stock market went up, aside from 2022 where it did have a hiccup, but the 4 or 5 year trend has been up in the stock market, you still had people rating the economy badly. And the only thing that I can pull from that is people get really upset at high prices.
Yeah, that was really a huge takeaway to me that I learned about too, just because, like you said, our careers had not overlapped with such a significant period of inflation, and how frustrated I still see it today, Chuck, meeting with clients, how upset people are about the price of groceries, about the price of new vehicles. That still lingers on much longer than I would have anticipated if you had just told me the numerical data that we would see from an inflation perspective. I wouldn't feel as if it would have such a lingering impact. And I do feel like perhaps some of this renewed optimism that we're seeing here and covering this story is the fact that the longer time marches on, where you see inflation trending at 2.6 or 2.7, the further away they distance themselves from those memories of inflationary times, and that leads to this renewed optimism on the economy.
So that's what we've got going on as it relates to the vibe session. And so we'll put that one to bed for a little bit here. Why don't we take a little bit of a break as we head towards the bottom of the hour. When we come back, we got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bent you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Key Numbers to Know for 2025. Mike, when it comes to 401ks and their contribution limits, 2025 is a little bit unique in that it is the first year of the super catch-up limit.
It is, yeah. So there's a brand new contribution excess amount that you can put into your retirement plan, but only for a very specific window. You must be between the ages of 60 and 63 to participate in this special super catch-up contribution, according to the Secure Act 2.0. And so there's a little bit extra that you might be able to put in if you fall into that age demographic.
So how much is the normal 401k max? How much is the regular catch-up? And then how much is the super catch-up?
Yeah, so for the normal 401k contribution limits, the most that you can put in 2025 is going to be $23,500. If you are over the age of 50, you can do an extra $7,500 into that 401k. And then finally, if you just happen to be in that narrow band, you can do an additional $3,750 catch-up contribution on top of everything else that we already went through.
Folks, our guide this month is titled Key Numbers to Know for 2025, and this is just one of the numbers that's included in it. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. That number again to request the guide is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are retreating as investors digest November retail sales data posted this morning, where retail sales climbed 0.7% in November, better than estimates of 0.6%. Wall Street's also readying for the conclusion to the Fed's final meeting of the year tomorrow afternoon. Right now, the Dow is off by 254 points, or about 0.6%. S&P 500 also down by nearly 0.6%, or 34 points. And the NASDAQ is down by 0.75%, or 148 points. The Russell 2000 selling off by over 1%, or 28 points. 10-year Treasury yield is down by 1 basis point at 4.38%, and crude oil down nearly 2% lower on the day, trading at $69.43 a barrel. Pfizer shares are up by 4% after the drug maker unveiled its 2025 forecast that met Wall Street expectations, projecting double-digit earnings growth. Meanwhile, buy now, pay later company Affirm said it plans to sell $750 million in convertible notes and use the proceeds to buy back some of its stock and other securities. Affirm stock down by 5% on the day. Elsewhere, Nvidia down by 3% a day after entering correction territory. Broadcom shares are actually pulling back by 6% today after rallying more than 45% over the past week, following its upbeat forecast as revenue from its AI business grows. Solar Edge Technologies received a double upgrade from Goldman Sachs to buy from sell, where the bank sees the makings of a turnaround story for the clean energy company, with 2025 being a key inflection point. That stock is up by 16%, and shares in PG&E up by about 1% so far today, following news that the Biden administration will lend the utility company a record $15 billion to finance its efforts to upgrade the power grid and reduce emissions. I'm Tucker Silva, and that's Wall Street Watch.
Paul, let's take a quick look. I want to talk a little bit about the – I know that we cover this every day because there's freaking 3 months between the election, or 2 months between the election and the inauguration. What do business people think about Trump coming into office? I don't know. Like, they're excited, right? Like they're hopeful they're going to get more tax cuts.
Right.
How many times are we going to say it?
The high points to hit, yeah, you're right, is ultimately if you are in Wall Street or if you had voted for Trump, certainly you're going to be wearing rose-colored glasses and feel as if that all the economic policies that he is going to present are going to be additive to the market and the economy in general, and you're going to dismiss the notions that the ones that could be perhaps less favorable, and tariffs is usually the one that could fall in the less favorable camp from an economic perspective, that those are rather a bargaining chip than something that is actually going to come to fruition. And that's basically the gist of this piece here that goes through sort of the two sides to Wall Street's expectations for a Trump presidency. The tariffs remain, a huge concern, but if you are in favor of Trump and his economic policies, you're less concerned that they're going to be as widespread as rumored. And then on the other side, you are encouraged by the fact that there will be less regulation and lower taxes. Those continue to be sort of the bullet point items. As you mentioned, what's so challenging about all this is we don't know. We have no idea what it's really going to look like, and it's anyone's guess how severe some of these actions will be.
Yeah, we just don't know, and we still have a little bit over a month to go, which means that we just get the endless speculation from writers like, well, maybe it's going to be this, well, maybe it's going to be that, and it's kind of like, okay, well, it's going to be something, so why don't we just move the inauguration up a month and call it a day?
The one area that I'm a little bit, I can speak with more conviction that I'm pessimistic on the significant impacts of it is this idea of putting together a significant effort to cut down any fiscal deficit that the country has on the federal level. I just don't feel as if there is going to be significant impact on those endeavors, the committee with Musk and others to really scrutinize spending and get that to a better level. I just think that's way too difficult of a challenge, and that is mentioned in this piece here. So that's one area where I can speak with a little more conviction that I just feel like that's going to be too uphill of a climb to get Congress to sign off on any significant cuts that are going to make a meaningful impact to the overlying deficit here.
Yeah, this is an area where I think that, look, people are talking about it like, Elon Musk is going to come in and just be like, oh, like I'm getting rid of like everyone in the government. And Elon Musk is not employed by the U.S. government, right. So he can't actually do that, number one. B, look, we've had multiple chances to try to manage federal spending in the last couple of decades, including a previous Trump presidency. So when we look at the record of whether you go through George W. Bush, Barack Obama, Donald Trump, Joe Biden, you go through there and say, hey, which one of these presidents, presided over a Congress that, decided to meaningfully manage the deficit downward in any kind of fashion? Out of those four, the answer is none of them.
Right.
Which, the piece that's really interesting on this to me is that there is a sea change that happened when Bush 2 came into office. Because, for better or for worse, Reagan, Bush 1, and Clinton all had reckonings during their presidencies where they either said, hey, I've got to raise taxes, or I've got to cut spending in ways that they didn't want to. Reagan and Bush both had to raise taxes before the end of their term, actually, because there was concern about the U.S. fiscal side. And they didn't want to. Like, do you think Ronald Reagan sat awake at night being like, I would love to go and raise taxes? No, of course. Same with George Bush. He had no desire to go and do that. On the other side of things, Bill Clinton had no desire to go and cut federal spending, but he was pushed because of how midterms went in 94 and basically had to go and go along with a Republican Congress that said, yeah, we're going to push for some spending reforms and things like that. And ultimately, all three of those presidents, 2 Republicans and 1 Democrat, said, yeah, we've got to figure out how to manage the deficit a little bit more appropriately here. The last 4 presidents, 2 Republicans and 2 Democrats, there aren't really facts and evidence on any of their terms that suggest that deficit control was a meaningful thing that they cared about. And so it's not just Elon Musk being able to come in and say, well, I'm going to go and cut this and cut that, because Elon cannot do that. That's not how any of this works. And in fact, what you will find more often than not is congressmen, senators, they want federal spending in their districts and states because it creates jobs and brings money to their states. And so you have to have a concerted effort at the congressional level to say, no, I'm not going to pursue that policy because there's something bigger that we need to deal with on the federal level, and as such, we're going to do so. So I think when the rubber actually meets the road on this, you're going to see, hey, who actually is going to put up or shut up on this? And maybe you actually get some kind of meaningful reduction, but it's probably not coming from getting rid of a few people that are working at the Social Security Administration or the NOAA or NASA or wherever the heck it is.
Right.
Because that's not where the spending is going.
No way.
The spending is going to Social Security, Medicare, the Defense Department, and interest on the national debt.
Yep. Hard to touch those 4.
It's kind of hard to touch. I mean, look, we just saw an NDAA bill pass the House I'm pretty sure it passed the House. It certainly passed the House Armed Services Committee. I'm pretty sure it cleared the House as well for $900+ billion for next year. Doesn't seem like the House wants to cut defense spending.
No.
I also have not seen anything pass the House or Senate about reducing Social Security outlays or Medicare outlays for obvious reasons. And as far as the interest on the deficit goes, unless you want to get into controlling every aspect of interest rates, not just, short-term through the Federal Reserve, but, hey, like, we want to make, all interest rates 1%. It's not really. You've already spent the money, and the interest rate is what's being set by the market now. So you don't really have a ton of control over that because those are decisions that you made over the last 10, 20, 30 years that got you to this point. So you've got to see some actual work done there. And I'm not saying that it can't happen, but I'm saying the facts for the last 2.5 decades are not in evidence that our politicians are sufficiently concerned with the deficit to make a real impact there. I think that's kind of where I land. Anything else to add on that, Paul?
No, I'm in the same boat.
Let's take a quick break right now. When we come back, let's see, what do we want to get into then? You want to do deal making or TikTok ban, Paul?
Let's go TikTok.
TikTok right after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. If you're retired or nearing retirement and haven't done your planning yet, you could be missing out on opportunities that can save you thousands of dollars. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called Balancing Asset Protection and Avoiding Estate Taxes. Early estate planning can have many benefits, especially if you want to protect the assets. But there's another big advantage. Doing your planning the right way might also help you eliminate your estate taxes. Learn how to keep your assets in your family and avoid probate. Get Cushing & Dolan's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes. Call right now, 866-848-5699. That number again is 866-848-5699. Or you can request your guide online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax-free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699. 5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, let's talk a little bit about TikTok, Paul. So TikTok has now asked the U.S. Supreme Court to intervene on the ban that is scheduled to begin in a little over a month. I believe it's January 19th is when it is set to begin. What are they saying? How are they approaching this? I mean, I know we're not seeing, oral arguments or anything along those lines, but they're clearly saying, hey, you need to help us on this because we don't want to sell this.
Exactly. They're just trying to enact any type of delay tactics that they can. As you mentioned, it is to go into effect on January 19th. At that point in time, no downloads or updates of TikTok could occur across Google's services or Apple's App Store at that point in time. And so as a result, what you've seen is the lawyers for TikTok and its parent company ByteDance asking to suspend the ban and allow them to appeal the lower court ruling that had been reached earlier this year regarding this ban for January 19th. And it's just an interesting case to continue to fall. Particularly, it coincides with, I believe, Trump will step into office the day after. Is it the 20th? Yeah.
The day after.
The day after. In his first term, he was, for this idea of banning TikTok, but then during his recent presidency run, it seemed like he, I believe, had his own TikTok account and utilized it as part of the election campaign.
And not only that, said, look, I don't want to ban it anymore.
Right, exactly. So it seems like he has taken a different stance at this point. Basically, what the ruling was supposed to be is that ByteDance would sell the non-Chinese part to someone, a U.S. company here, because there are concerns from the intelligence community that it posed a threat to U.S. national security and allowed China the ability to surveil Americans and spread Chinese propaganda. So that's been at the crux of this issue for a long time now. It will be interesting to see what happens. It seems like what is going to happen is the attempt to get this delayed even further and just kick the can down the road to give TikTok and ByteDance some more time to figure this out.
The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Paul, has your porch ever been pirated?
It has, particularly living in the Boston area, not in the burbs, but
your timbers are shivering.
Definitely been raided.
I haven't had it.
Boston
I haven't had it yet.
Well, I mean, it's the city. The city's huge for it. Chuck, it must have happened to you in the city,
when I was living in Somerville, we had, it wasn't like all the time. So, I mean, there were plenty of times when I had Amazon packages successfully delivered there, and it was no real problem.
Right.
And look, most of the time that stuff was being taken, it was like, okay, great, you got a stick of deodorant. Like, good luck, have fun smelling nice. Like, great. So, I think the thing that I'm trying to wrap my head around is, look, there's this piece in the Boston Globe talking about how porch pirates are, using more technology to try to, get better at stealing. And quite honestly, like, here's one thing that I come to on some of this stuff. If you're just going out and, like, walking around and you're like, oh, I'm going to take that package, it's dumb and loserish, but, like, you don't demonstrate any particular skill at anything. If you're coming up with, like, technological ways of being a better porch pirate, man, you probably actually have some talent. Why not apply that to actually benefiting society in some way?
Oh, yeah. I just...
like, it's not like you're someone who has no skill or talent at figuring out problems. It's just the ones you're figuring out are a net negative for society because you're stealing people's stuff. And this is something that is more bothersome to me, because if someone's just going around just, like, stealing packages for fun or whatever, okay, fine, like, great. Like, I don't really know what to do with you. This is more bothersome to me because it suggests that someone is planning this and actually figuring out how to get around, like, issues. And to me, that's more like, man, you should be doing something with your life.
Yeah, and what's make this feedback loop worse is that companies like Amazon have really thrown their hands up in the air in terms of, I mean, not like there's a lot of action that they can really take, right? You can have a doorbell cam, and if someone comes in a hooded, outfit and you can't make out their face, what good does that do you? And Amazon has just really said, we had a situation recently where a fondue set was dropped off at our house that was for someone in a town over, and my wife called up and was like, hey, we didn't order a fondue set. Like, can you return it? And Amazon's like, don't worry about it. Just hang on to it. And that's what it's more costly for them to deal with us,
How's the fondue been?
Yeah, you liked it?
She tried to foist it on my sister-in-law as a Christmas gift. So now it seems like it will be part of our, what's the Santa swap called?
Secret Santa? Yankee swap?
Yeah, we do a Yankee swap thing at a family party, so I think she's going to use it for those purposes. But it just shows you, Amazon doesn't really care, so we have a fondue set.
You're regifting somebody else's gift.
Yeah.
It's not technically regifting if it wasn't gifted to you.
It's some term, though.
It's...
Foisting?
Here's a question. If something gets delivered to your porch by mistake, are you the porch pirate?
We tried to return it.
Let's take a quick break. Hour 2 coming up in just a little bit.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Protect your assets and avoid tax consequences by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets away from the nursing home while potentially eliminating your estate taxes. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. Our guide this month is titled The Key Numbers to Know for 2025. Mike, one of the questions that we get asked quite often is, how much can I gift in any given year without having to file a tax return or pay any tax on it? What does that number look like for 2025?
Yeah, there's a tremendous amount of confusion about this, Chuck. I think there's a lot of folks who assume that when you give a gift or receive a gift, there's taxes due at the time. And that is almost never the case unless we are talking about tremendous dollar amounts.
Sure.
In 2025, the gift tax exclusion amount is going up to $19,000 from $18,000. That means that you can give up to $19,000 to any individual without having to file the special return of a gift.
What about if I am trying to make a gift in conjunction with a spouse? How does that work in terms of what we're able to do?
Yeah, I mean, you're able to double it immediately, right? So that $19,000 gets doubled. Keep in mind, too, that these are the gift tax limits per individual. And so you have seen people say, okay, I'm going to gift money to my son, my daughter-in-law, their 3 children, and in each of those cases, if you are married, that could be $38,000 per person without even have to file a tax return.
Our guide this month is titled The Key Numbers to Know in 2025, and it covers these numbers and a whole bunch more that can help you optimize your financial plan. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all 3 and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here on the Financial Exchange as we kick off hour 2. We got stocks selling off across the board. The Dow is off 237 points. If it closes down today, that will be 9 straight down days for the Dow Jones Industrial Average. The last time it did that was in the 1970s, Paul.
Wow. Long time.
Been a while since we've seen that. S&P 500 also down about 0.5%. NASDAQ down almost 2/3% today. So, again, all 3 major U.S. indices are selling off. 10-year Treasury down 2 basis points to 4.38%. We've got oil, West Texas Intermediate down $1.46 a barrel to $69.25 at the moment. And we've got gold off $15.60 an ounce to $26.54 right now. Also, the AAA national average for gas prices back up another 0.6 cents to 3.03 even. So we still can't get that below $3 a gallon nationally, even though we've got large parts of the country that are floating around kind of that 253 to 276 range. If you're going basically anywhere from like Texas to Tennessee to Nebraska, that little triangle there, it's all cheap gas there. If you want the expensive gas, the premium stuff, Head out to California, Nevada, maybe Oregon, Washington State. Those are good places where you can get the really expensive gas. New York State and Pennsylvania also falling into that highest cost category as well right now if you want something a little bit more local for, a more primo gasoline experience. Let's talk a little bit about this piece from the Wall Street Journal. It's titled, Why This Frothy Market Has Me Scared. And basically what it's talking about is not everyone, but statistically very high numbers of people relative to the long-term average think that stocks are going to do great in the next year. And stocks in the U.S. have done just about the best they've ever done versus the rest of the world over the, recent past. Valuations are steep, and so there's some concern that maybe markets are a little bit over-exuberant and over-optimistic right now. Your thoughts, Paul?
Yeah, if you look at what they put together in this piece is whether you're studying investment newsletters or you're studying just overall sentiment from economists and analysts out there, the point that's made in this Wall Street Journal piece is that it's overly optimistic. It's really hard to find many people who are bearish on the stock market heading into 2025. And everyone is of the opinion that AI and the U.S. economy are in a great spot. I would agree with the overall sentiment on the piece that valuations have reached a really high level. It does feel like very much so that we are in a risk-on market, Chuck. Crypto reaching its significant, 52-week highs and things like that always seems to, or in recent past, has seemed to tie into times of intense speculation, whether it's the SPAC kind of cannabis wave post-pandemic where there was a lot of savings in excess on the sidelines that had people investing in those types of companies. It does feel like a similar sort of market conditions at this point in time where the market and many of its participants can do no wrong. I guess recently there's been some sell-off on lesser names. The big names have still been kind of keeping us up. But even what's gone on with Broadcom that we'll talk about too, just a lot of these companies trading at significant high, rich valuations on the anticipation for this future earnings growth. And things are pricey. I'm with them.
Yeah, and Paul, were you, I can't remember if it was you or someone else, when we were covering, Bank of America published a set of 20 different valuation metrics for the S&P 500. And statistically, 19 of them have the S&P 500 trading more expensively than historical average levels. Were you
No, that sounds like a good piece, but no, I was not.
Can we touch on some of these?
Sure.
Trailing PE for the S&P 500. So how expensive are stocks relative to the last 12 months of earnings? The historical average is 14.9 times earnings. Right now they're 25.9. So they are, again, significantly overvalued. The trailing GAAP PE, so trailing generally accepted accounting principles, historically 15.2, now it's 29.9. So 96% above the historical average. Forward PEs, long-term average is 15.9. Right now you're 22.2, 39% overvalued. Trailing normalized PE, normally it's 19.1, now it's 27.8, 45% overvalued. Price to book, I skipped some of the other PEs just because we don't need to do like 6 different PE ratios. It's fine.
They're expensive.
It's overvalued. Price to book, normally is 2.71. Right now it's 5.32. Wow. Enterprise value to EBITDA, normally 10.6, right now 16.1. Price to operating cash flow, normally 11.5, right now 20.1. Enterprise value to sales, normally 2.01, now 3.43. Normalized earnings return, earnings premium, normally 381 basis points, now 193, 49% higher valuation. Some other ones that I just don't understand why these matter. The S&P 500 in oil terms. Again, I don't know why this matters and why we would expect the price of oil to follow the price of the S&P 500, but Bank of America put it in here, so I'm going to read it. Normally 27.5 times, now 86.7, so 215% overvalued. I don't know if there's much meat on that bone, quite honestly. One interesting one. the S&P 500 versus the Russell 2000 in forward PE ratio terms. The S&P 500 normally is about 4% more expensive than the Russell in terms of forward PE. It's now 28% more expensive than the Russell. And finally, the S&P 500 market cap relative to the GDP of the United States. So how much money is in stocks relative to the U.S. GDP? Historically, 0.67. Right now, 1.74, 158% overvalued. So you do the math on this, and then you actually look at where this falls on the historical distribution. Most of these numbers are in the top anywhere from 1 to 5 percentiles all time in terms of how rich they are. And it's not to say that stocks can't continue to move up. It's just that, hey, in order for them to continue to move up, the earnings growth, as you noted, Paul, it's got to be there because we've already done the multiple expansion piece.
Right.
We've already done that one. That lever has been pulled, and earnings are going to have to continue to grow. And specifically, the big thing that's being priced in for next year is further margin expansion. So S&P 500 profit margins, according to FactSet right now, if you look at kind of where we're sitting on this stuff, you're seeing S&P 500 profit margins around 11 or 12%. You're expected to see those expand by 15% next year to somewhere around 13.5 to 14%. That's what needs to drive the ship as far as where the earnings growth is projected to come from, because revenue growth is only supposed to be up about 5.5% next year for the S&P 500. So if you're going to get the growth that you want in earnings, analysts are saying it's got to come from margin expansion, which, look, from a societal perspective, isn't one of the things that we've been complaining about recently, that companies are making too much money and workers aren't taking home enough?
Right.
This is an expansion of that phenomenon in progress if you're going to see it. So we'll see what happens, but this is where we sit right now with an expensive market that, again, the counterpoint to all this is, look, if you've questioned this market for the last 2 years, you've kind of gotten bludgeoned over your head, repeatedly, just like whack, 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 whack.
That's the issue with valuations, is that no one knows when they revert back to the mean.
They are not a good predictor of short-term movements in any way, shape, or form. Quick break here. When we come back, we got trivia, and then we're talking Broadcom right after this.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Planning for later life is a year-round effort, and with the calendar about to change, there are several important numbers to understand as we turn to the new year. Hi, this is Mike Armstrong from the Armstrong Advisory Group. In our new guide called Key Numbers to Know for 2025, we'll discuss a variety of topics that may help you with your planning for the upcoming year. The guide focuses on many subjects, among them numbers related to retirement account income and gifting limits, Medicare Part B premiums, and marginal tax brackets, all of which are crucial to your overall planning strategy. Learn about how these numbers may affect your financial plan in 2025 by calling our office today at 800-393-4001. Ask for your free guide called Key Numbers to Know for 2025. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So, yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that. But we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner with the Disabled American Veterans Department of Massachusetts. This year's 5K was another tremendous success. Every dollar raised supports a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. If you'd like to help our great American heroes this holiday season, visit dav5k.boston and make a donation today. We thank you again for your support. The DAV 5K Boston is presented by Veterans Development Corporation. Let's do a little bit of trivia here on the show. Continuing our Christmas theme here, coming up on Christmas. Christmas songs have become a major part of celebrating the holiday season. One Christmas song, however, has proven to be more popular than the rest. Trivia question today. What is the best-selling Christmas song of all time? Once again, what is the best-selling Christmas song of all time? Be the 7th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, be the 7th correct response to text us at 617-362-1385 to get that Financial Exchange Show t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, for those who aren't familiar with them, what does Broadcom do?
So Broadcom is a semiconductor developer and manufacturer and supplier, and so typically you'd be familiar with them because they were responsible for a lot of the work on putting together the chip that is used in your Apple smartphone, or was used rather in your Apple smartphone. More recently, they have started to utilize putting chips together for data center operations regarding AI calculations, or rather regarding AI and its development. And that's why this stock has been so hot recently over the last couple of days, is because of their endeavors and revenue growth in sort of the AI space thing, designing those types of chips.
So here's the big thing that I come back to with Broadcom here is this one, more than Nvidia, this is basically, in the last 2 weeks now, investors saying, hey, this is going to be the next company that grows like Nvidia without showing any growth like Nvidia to this point. And that's the problem to me when I look at this, because Nvidia, yes, like the valuation might be high, but we covered this the other day. If you look at these two companies, and say, okay, like let's look at them, side by side and view, how they might be similar or different, from a couple different perspectives. The biggest one that I like to look at is just how quickly are they actually growing, because I think that's where a lot of the meat is on this. And Broadcom for the last 5 years, if you look at its revenue growth, it's averaging 17.9% revenue growth for the last 5 years. Earnings growth over that time is 13.91%. This is, updated for the most recent quarter here. So you say, okay, like those are fine. Those are, good. Nvidia here for the last 5 years is showing revenue growth annualized of 39%. 39 versus 18. More than double.
Right.
Nvidia's profit growth, its earnings per share growth, 48% per year over the last 5 years on average, compared to 13.91. So Broadcom, especially if you're buying it with what it just did, which is, again, kind of wild to see a company go and do this, is Broadcom just woke up one day, or Broadcom investors woke up one day and said, hey, you know what? Before earnings, your valuation was $800 billion, and now we're just going to add $300 billion to that in the span of a week.
You took a lot of the points that I want to make too. Is just it's so not comparable to say that Broadcom is the next Nvidia when you study the revenue growth comparisons that we're looking at here, and in particular the metrics on the price to earnings valuations. Now you have Broadcom sitting at a price to earnings multiple of 186, their forward PE of 37 or 38. It's just absolutely crazy to make this comparison, particularly those specific AI intelligence chips that we're speaking of. They saw a 12% increase in revenue from a year ago, and so certainly they said that there's going to be some revenue that jumped in other parts on infrastructure to $12.2 billion, but keep in mind, you have a company with Nvidia that is doing what, 35 billion a quarter in revenue, Chuck, total?
Yeah.
So it's just not on the same scale that these two companies are growing. It is so hard to replicate what Nvidia has done, and to trade Broadcom like it is going to grow its revenue like what Nvidia did. To me, it just really blows my mind. I could not believe how much it was up after this earnings report. I believe it was 20 or 25% that day when it came out. It blew me away.
And the other question that I guess I have as it relates to this is the AI spending boom's been happening for the last 2 years now. Why is Broadcom not participating in it the same way that Nvidia is? Like, what's going to make the next 2 years? Because the piece in here, I'll quote from Bloomberg, at the heart of the rally is Broadcom's prediction that the addressable market, not what they think they can sell, the addressable market, which when the term that you see in PowerPoints is typically total addressable market, TAM or TAM for short. And generally, anytime that I see TAM in a PowerPoint, I'm like, oh my goodness.
BS.
The place where you see it most often is like these fitness things where it's like, oh, the total addressable market for fitness is like $30 billion. And if we just get 1% of that, okay, like, yes, good luck with that. The addressable market for AI components it designs for data operation centers will be as big as $90 billion by fiscal 2027. Okay, why are you not selling more now? Because that market has expanded tremendously over the last 2 years. Why is your growth so much slower than Nvidia's? Why is your growth so much slower than... And again, I'm just going through like the companies that are on kind of that, even like AI adjacent side on this. Why is your growth so much slower than AMD, whose revenue is growing 28% a year, even though they have, like a huge legacy computer business and stuff like that? That's what I'm trying to get around is how are you going to capture that differently in the next 2 years? And if there is anything that stalls out there, because, by the way, NVIDIA's growth is slowing right now.
Mm-hmm.
Why are you going to be able to be different then?
And why, why should I have to pay a premium of 40% to the valuation or 50%, whatever it's gone, just because of something you're going to do in 2027, Chuck? Why should I have to pay that premium up front? Let's see if you can deliver. And I always have skepticism the further out a promise is in terms of its deliverable date in 2027, for example, in this case, where they're mentioning that they are in development with AI chips with 3 very large customers and they want to deploy 1 million of them by 2027. The further it's out, the more skepticism I have, because there's a long time between that runway that things could go wrong or the market could change, like you said.
Totally. And the thing that, well, we got to go to break. I have one more thing that I want to say on this when we come back. We've also got the trivia answer right after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Early estate planning is crucial if you want to protect your assets and avoid massive tax consequences. Cushing & Dolan are experts in elder law and taxation, and their new free guide can help give you just that. It's called Balancing Asset Protection and Avoiding Estate Taxes. In it, you'll learn how to keep your assets away from the nursing home while reducing and potentially eliminating your estate taxes. If you have an existing estate plan but aren't sure about your potential liability, or you need a new plan, call Cushing & Dolan today at 866-848-5699 and get this free guide called Balancing Asset Protection and Avoiding Estate Taxes. Don't leave your assets to chance. Call 866-848-5699. That's 866-848-5699. Or you can request your guide online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Key Numbers to Know for 2025. Mike, when it comes to 401ks and their contribution limits, 2025 is a little bit unique in that it is the first year of the super catch-up limit.
It is, yeah. So there's a brand new contribution excess amount that you can put into your retirement plan, but only for a very specific window. You must be between the ages of 60 and 63 to participate in this special super catch-up contribution, according to the Secure Act 2.0. And so there's a little bit extra that you might be able to put in if you fall into that age demographic.
So how much is the normal 401k max? How much is the regular catch-up? And then how much is the super catch-up?
Yeah, so for the normal 401k contribution limits, the most that you can put in 2025 is going to be $23,500. If you are over the age of 50, you can do an extra $7,500 into that 401k. And then finally, if you just happen to be in that narrow band, you can do an additional $3,750 catch-up contribution on top of everything else that we already went through.
Folks, our guide this month is titled Key Numbers to Know for 2025, and this is just one of the numbers that's included in it. We also have discussions about IRA contribution limits, tax brackets, a whole bunch of different things that are included in here. How do you request the guide? Call 800-393-4001. That number again to request the guide is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, what is the best-selling Christmas song of all time? Well, that would be A White Christmas. According to the Guinness Book of World Records, the best-selling Christmas song of all time is White Christmas by Bing Crosby, with estimated sales of over 50 million copies worldwide. Joe from Hamden, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Joe. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Tuck, do you know who wrote White Christmas?
I don't.
Paul, do you?
No.
Irving Berlin.
Okay.
Do you know,
okay.
Do you know, so in terms of, Irving Berlin, again, I know I just threw that name at you, but he wrote, a number of, pretty big Christmas songs. You know the interesting thing about Irving Berlin?
Never heard of him, so I'd go ahead.
You've really never heard of him at all?
I really have never heard of Irving Berlin.
I'll jump in on that as well.
Okay. Well, I'm sorry to hear that because, again, like White Christmas, kind of a big one. Irving Berlin was Jewish. Which is just, again, kind of something that always blows people's minds. Is like, hey, like, the guy that wrote White Christmas is Jewish. So I just always find that kind of interesting there. Broadcom. So in terms of the last thing that I wanted to say about them, I want us to, Tucker, can you get the time machine fired up for us when you get a chance?
Stand by.
So I want us all to take a little bit of a trip back in time right now to August of 2023. It's August of 23. The sun's shining. It's 92 degrees out, and our lawns are parched. And Nvidia comes out with its earnings report on the 23rd. And here's what we saw from them. I'll quote here from CNBC. Nvidia said it expects fiscal third quarter revenue of about $16 billion, higher than the 12.61 forecast by Refinitiv. And this, I think, is the key difference between Nvidia and Broadcom right now is Nvidia's stock has done what it's done over the last couple of years because their earnings projections, which, by the way, they then topped by like another $2 billion, they were beating analyst estimates by like 50% a quarter and by like billions of dollars on earnings for a quarter for a company that was doing, again, like mid-double-digit billions in earnings. So to be able to look at Broadcom, which hasn't done that yet, and be like, well, they're going to be the next Nvidia, it's kind of hard to, because Nvidia's biggest thing that it's had going for it is that they just consistently over-delivered. it wasn't just that they knocked the cover off the ball. It was like, Paul, when you were a kid, you played video games, right?
Sure.
Did you ever play any of the sports ones like a Madden or an NBA or something like that?
Exclusively, yes.
How much time did you spend making players in the create a player mode?
Oh, a lot of time, and running the franchises to championships, the whole thing. Yeah,
totally. But you're a creative player. You're like 99 everything. Like where 99 is
right.
the highest rating that you can have for Paul Lane. Like you want to make yourself the best player in the game naturally.
7'2".
Exactly. It's you're in Madden and you're throwing 86 touchdowns in a season, which is where the term video game numbers comes from. Like just things that can't happen in the real world. Nvidia was putting up video game numbers as far as their earnings. They were beating earnings by so much that it was silly. And that's the key difference is while we can talk about Nvidia's valuation as being high, it's high because they've consistently delivered the goods, man. Broadcom, 3 months ago, had a major earnings miss, and the shares did not do well because investors were concerned about, hey, where could this end up going? The stock fell around earnings from 171 down to 134. It's more than a 20% drop in late August, early September. So this, I think, is the key difference here in looking at these companies, which is one of them, Nvidia, for as much as we talk about, hey, like how long can this go on? This going on is consistently beating earnings by a boatload, whereas Broadcom's, again, they're fine. I'm not suggesting that they're going out of business or that they should go out of business. It's much more, okay, so you've got this total addressable market of $90 billion by 2027. Good luck with that. It's kind of what it feels like, right?
Yeah.
So I think that should close things out. Nvidia, by the way, is also now into correction territory.
I hate that it's even out there, but anyway.
You hate what's even out there?
When they're up 160% year to date, I feel like they should be excluded from correction territory. I know it's the headline. I'm not at you, just general financial press. It's frustrating to see that.
You know what else is frustrating? Like, no one ever talks about all the other stocks that go into correction territory.
Yeah, right.
Like no one's sitting there today like, hey, ExxonMobil's in correction territory, which, by the way, it is. It's down like 10% in the last 2 weeks. No one's sitting there like, hey, ExxonMobil's in correction territory, but Nvidia goes down 10%, and it's got to be this giant news, even though, as you mentioned, the stock's still been pretty good for people that have held it for a while.
If you're retired or nearing retirement and haven't done your planning yet, you could be missing out on opportunities that can save you thousands of dollars. Cushing and Dolan are experts in elder law and taxation, and they have a new guide out this month called Balancing Asset Protection and Avoiding Estate Taxes. Early estate planning can have many benefits, especially if you want to protect the assets, but there's another big advantage. Doing your planning the right way might also help you eliminate your estate taxes. Learn how to keep your assets in your family and avoid probate. Get Cushing & Dolan's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes. Call 866-848-5699. That's 866-848-5699. 5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Paul, what can I learn from young Warren Buffett, and how do I meet young Warren Buffett?
What this is referring to is...
Oh, thank you. Oh, it's 1965. The summer of love is still on the horizon, not yet having happened. Warren Buffett is beginning his investment career. What do we look at, Paul?
This is from Buffett's Early Investments, a book by Brett Gardner, in which he looks at 10 of the companies that Warren Buffett invested on between 1950 and 1966 when he was in his 20s and 30s. And basically the question that they're asking is, could anyone do today what Buffett did then? Obviously, the market has changed significantly where there is much more information available at all of our fingertips, but you could also argue that the markets are much more efficient than they were back then in terms of looking at bargains out there. So what Mr. Gardner did is he spent 7 years on Saturdays and other days of the week researching what old reports were available during Buffett's time to look at 10 companies, many of which listeners wouldn't recognize. I'll rattle off a couple that they would recognize. American Express and Walt Disney are 2 of the 10 that he scrutinizes. And it does differ a bit in the sense that Buffett was going and asking these managers questions, something that you can't readily do now. But basically, he was able to make great investment ideas and really bet big on them during that period of time. Certainly extremely impossible to really replicate what he did back then, but certainly an interesting story nonetheless.
Other things, I've never really looked at pictures of young Warren Buffett, and this piece in the Wall Street Journal has a picture of young Warren Buffett reading the Wall Street Journal, which is kind of nice and meta, I do have to say. Did either of you guys know Gene Kranz?
No.
Gene was the flight director at NASA for Apollo 13. He was the lead flight director then. He was also one of the flight directors on Apollo 11. And young Warren Buffett looks just like Gene Kranz did in the 1960s. So I don't know. Has anyone ever seen the two of them in the same place at the same time?
I have no idea.
Gene's still alive, too. So here's the thing to watch for. If Gene and Warren, go out around the same time, I'm just saying. But, yeah, young Warren Buffett, good-looking dude. Gotta say.
Sharp fellow, yeah.
Good-looking dude.
He does look good.
Looks good. Let's take a quick break. When we come back, we got Stack Roulette right after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Financial planning is a year-round job, and with 2024 coming to an end, now is the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help you understand some key numbers that could affect your planning next year. There are many important topics to review, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, the guide also focuses on the many ways that the government taxes your Social Security benefits. Take the time now to reflect on your current strategy so you can be fully prepared for any adjustments you may want to make in the future. Get your copy of our new guide, Key Numbers to Know for 2025, by calling 800-393-4001. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Early estate planning is crucial if you want to protect your assets and avoid massive tax consequences. Cushing & Dolan are experts in elder law and taxation, and their new free guide can help give you just that. It's called Balancing Asset Protection and Avoiding Estate Taxes. In it, you'll learn how to keep your assets away from the nursing home while reducing and potentially eliminating your estate taxes. If you have an existing estate plan but aren't sure about your potential liability, or you need a new plan, call Cushing & Dolan today at 866-848-5699 and get this free guide called Balancing Asset Protection and Avoiding Estate Taxes. Don't leave your assets to chance. Call 866-848-5699. That's 866-848-5699. Or you can request your guide online from our website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Paul, what do you got for me for Stack Roulette today?
We have one of our listenerships, main destination has been named the country's best small town to visit, and it's not for the first time. U.S. News and World Report revealed its 2025 best vacation rankings on Tuesday, and according to them, Bar Harbor, Maine has been crowned for the fourth straight year as the best small town to visit in the U.S. It was one of the several New England getaways that made the lists. Nantucket was number 10. Number 4 was Stovermont ranked 14, up from 19 last year. And Martha's Vineyard also was on there. And Kennebunkport, Maine was number 2021 last year. However, it must have done something to slip because they didn't make the cut for 2025.
Always good to see a few of those popping up on the list.
Some very nice destinations out there. They also did U.S. cities to visit. Boston ranked number 3 on the best U.S. cities to visits, jumping from number 14 last year. 2025, New York City was named the best city in the country to visit, while Washington, D.C. came in at number 2.
I got some big news out of Poland, if anyone's interested.
Sure.
The Polish government has announced that it is releasing 1,000 tons of butter from its strategic reserves.
Strategic butter reserve?
Is there any better reserve than the strategic butter reserve,
Is
Tucker?
it salted or unsalted? That's what I want to know.
Great question.
Yeah.
Great question.
So the Polish Government Strategic Reserves Agency, they have a whole agency dedicated to multiple strategic reserves, noted that the price of butter has recently increased significantly on world markets, primarily the result of a shortage of milk. The situation has also affected Poland, so in order to stabilize the situation on the market, the agency has announced a tender for the sale of large quantities of butter. So it's 1,000 tons of butter, which, again, remember that a ton is how many pounds, everyone? 2,000. You guys didn't know how many pounds are in a ton?
Paul and I just looked at each other.
You guys didn't know how many pounds are in a ton?
Don't call on me. Don't call on me.
Oh, my goodness.
I had a feeling it was 2,000.
Okay, so...
I didn't want to embarrass myself.
It's fine. Long story short, they're releasing 2 million pounds of butter.
It's a lot of butter.
It's going to be in 25-kilogram blocks, and the minimum sales price is €6.65 a euro, 665 euros per kilogram. And the first bids, which must be for a minimum of 20 tons, so I think we're out on this one, guys. The first bids are going to be accepted on December 19th. So if you want to try to line up a bid to get 20 tons of butter, we still have a couple days to do so, but it's going to be tight.
It's just incredible that there are strategic reserves for something like butter. It just makes me wonder what type of strategic reserves countries have out there. I'm sure the list goes on and on.
So it's funny that you mentioned that because some of the other ones that we do know is
maple syrup, right?
Canada has a maple syrup
That one I was
reserve.
aware of,
Yeah.
yes.
They do. Are either of you familiar with the Great Canadian Maple Syrup Heist?
Yeah, we've talked about it before. I
talked
don't
about
really
it a little
remember
bit.
it, but yeah.
Yeah, there were, speaking of large quantities, nearly 3,000 tons of maple syrup were stolen from a storage facility in Quebec back in 2011 and 2012. So that was kind of problematic. But yeah, I think, strategic reserves of foods, man, butter's one that you can understand, quite honestly, because it's kind of a staple. You need fat in order to cook.
Yeah.
The maple syrup one, you look at it and you go, well, I could go a few years without it if I really had to, the pancakes will be just fine with the butter.
Just put butter on, yeah, exactly.
So I did a quick search here for some other obscure ones. China has a national pork stockpile.
I'm on board with that.
Yeah. I'm going to have news source, Classic City News, so I know we've had this debate about whether Google is good anymore, so throw that out there as a caveat as to the source of this information. U.S. cheese stockpile is another one.
I did know about that one, yeah. I knew about that.
We have a U.S. federal helium reserve, as well as this is a strange one, a U.S. national raisin reserve.
Oh.
I would not have guessed that.
Why do you need that? All you got to do is grow grapes and leave
Right,
them out.
I think grapes would cover that if that were the case. And they'd say Europe's butter reserve, but it sounds like this is specific to Poland that we're talking about here. And, of course, the maple syrup one that you already spoke about.
I feel like they should have like an instant coffee reserve or something.
Do you guys know how... Maybe you can work on that, Tucker. Do you guys know how big the U.S. cheese stockpile is?
No.
About a ton.
1.5 billion pounds. We got 1.5 billion pounds of cheese just sitting around.
Wow.
Now, granted, it doesn't just sit around. You obviously can't just leave it there forever, so it's kind of cheese in, cheese out is the way it tends to work. But this is also where the term government cheese comes from.
Right.
And we now know that's 750,000 tons.
Yeah, a lot of cheese. Do you guys know how they make American cheese?
I don't. I avoid American cheese because I know it's like super processed, isn't it?
So here's what you do. You take cheddar cheese,
Yeah.
you melt it and add an emulsifier that basically makes it all rubbery, and that's how you get American cheese.
Yeah, just have cheddar then.
It's kind of gross, actually. And I say this as someone who loves cheese, but listen, American cheese, in my opinion, it's two potential uses. Grilled cheese, and occasionally on a burger, but I'd still prefer cheddar on a burger.
Sure. That's fair. I'm trying to see if there's anything else that we had that I missed on the strategic reserves. Nah, cotton reserve in India, that's not that exciting. We covered most of the obscure ones out there, but hopefully all those Polish companies out there really make those big purchases to take down that butter reserve to smooth things out.
Yeah, so the butter's going to be flowing like water in Poland now. So
right around the holidays, good timing.
It's good news. It's good news out there. Taking a look at markets, we got the Dow off 211 points. The S&P is down 19. NASDAQ down 65. So all three major indices still in negative territory today. We've got bonds, the 10-year still down 2 basis points to 4.38%. And so overall, a little bit of a downward day here, but nothing too big. We've just had the S&P 500 kind of chopping between like 6,050 and 6,080 for the last 2 weeks now. It has not gotten any momentum in either direction. And we've got a Fed meeting tomorrow, so maybe just all quiet in advance of a Fed meeting that I think people are anticipating pretty strongly at this point. So we'll be covering the Fed meeting quite a bit tomorrow in terms of previewing what to expect from Jay Powell and his Purple Tie crew, which would, by the way, be a great name for a band. And we'll make sure that we get you caught up on any economic data, as well as we do have building permits and housing starts data coming out tomorrow morning as well. So we'll fill you on what's going in the housing market tomorrow. Have a great rest of the day. Get your bids ready for the Polish butter, and we'll see you tomorrow on the Financial Exchange.